Welcome to the stock market, where trading is like navigating the treacherous lands of Westeros. A worthy gamble filled with intrigue, danger, and the potential for immense reward. Picture yourself as a new character, maneuvering through the chaotic market, trying to outsmart your competitors and avoid financial pitfalls. The stakes are high, the rewards can be immense, but the risks are very real. So, are you ready to play the game and claim your throne? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. You might be wondering, why would anyone want to enter such a ruthless battlefield? Just like the pursuit of the Iron Throne, the allure of stock trading lies in the potential for power and riches. But be warned, the stock market is littered with the remains of those who failed to navigate its complexities. Many new traders are seduced by tales of past victories, dreaming of their own triumphant rise. However, what they often overlook are the countless who fell in the battle. Are you prepared to learn from their missteps? In the stock market, understanding survivorship bias is like having the wisdom of Lord Varys. It's essential for survival. Survivorship bias tricks us into only seeing the victors, while ignoring the many who perished along the way. Think of it this way. When the banners of the great houses fly, it's easy to focus on the rulers. But it's the lessons from the fallen that can help you avoid their fate. Ready to arm yourself with knowledge and strategy? Let's dive in and see if you have what it takes to outwit, outplay, and outlast in the stock market's Game of Thrones. In the stock market's Game of Thrones, relying on past data is like trusting Littlefinger's whispers. Dangerous and often misleading. Many traders look at historical performances and see only the glittering successes, much like focusing on the reigning kings and queens. What they don't see are the countless failures, the traders who lost their fortunes and vanished from the records. This skewed data gives a false sense of security, leading many to believe that they, too, will emerge victorious. However, the harsh reality is that 90% of traders fail. Their dreams of financial glory dashed, because they relied on incomplete information. Ignoring the fallen can lead you to make the same fatal mistakes, much like a knight charging into battle without knowing the enemy's full strength. Remember, even Jon Snow knew nothing at the start. To truly survive and thrive in the stock market, one must understand survivorship bias, a lesson as crucial as learning the strategies of war from Meister Aemon. Consider the famous example from World War II, where analysts studied returning aircraft to determine where to add armor. They noticed damage concentrated on the wings, tail, and center, and initially planned to reinforce those areas. However, mathematician Abraham Wald pointed out the flaw. They were only looking at planes that survived. The planes that were hit in critical, unseen areas never made it back. Similarly in stock trading, focusing only on the winners skews your perception. You miss the vital data from those who didn't survive the market's battles. Understanding this bias helps you make informed decisions, much like a seasoned advisor guiding a ruler to victory. Just remember, if you're only listening to the winners, you might end up like Ned Stark, blindsided and beheaded. Survivorship bias in the stock market is as sneaky as Varys' little birds. Take Google for instance. We all know and love Google, the king in the north of search engines. But back in the late 1990s, there were countless other search engines, all vying for the throne. Lycos, Alta Vista, and Ask Jeeves are just a few of the would-be conquerors that ended up losing their heads. Predicting Google's dominance back then was as tricky as guessing who would end up on the Iron Throne. Many investors bet on the wrong horses and saw their fortunes vanish quicker than you can say, "Winter is coming." This illustrates how survivorship bias blinds us to the failures and makes us overestimate the chances of picking the next big winner. It's like putting all your gold dragons on a dark horse, only to watch it get devoured by a dragon. The 2023 US Investing Championship is another perfect example of how survivorship bias skews our perception. Imagine a tournament in King's Landing, where only the champions are celebrated and the fallen are conveniently forgotten. The top traders who made incredible gains are paraded like heroes of the realm. But But what about the countless others who lost their shirts? Their stories are as hidden as the crypts of Winterfell. These highlighted successes make it seem like anyone can achieve glory. But the reality is that many took significant risks and lost everything. Overly optimistic beliefs fueled by survivorship bias can lead traders to take reckless risks, much like a young knight charging into battle without armor. By acknowledging both the victories and the defeats, traders can protect themselves from future losses and avoid ending up as another tragic tale in the market's history. In the perilous world of stock trading, having the right expectations is as crucial as understanding the brutal realities of Westeros. Losses are part of the game, and accepting this can save you from becoming the next financial White Walker. Holding on to losing positions out of ego or the fear of missing out is akin to Cersei clinging to power in King's Landing. It won't end well. The market doesn't care about your pride, and holding on to sinking stocks will only drag you down faster than a direwolf in quicksand. Accepting that losses will happen and preparing for them is the first step to becoming a true master of coin. To avoid the fate of the fallen, having a solid exit strategy is essential. Think of it as your secret tunnel out of the Red Keep when the dragons are attacking. Tools like stop losses and the 20-week moving average can be your guiding stars, helping you navigate treacherous market conditions. For example, many stocks that once soared high, like Canopy Growth Corporation and Tattooed Chef Incorporated, plummeted dramatically after falling below the 20 WMA. Another notable example is Berkeley Lights Incorporated, which suffered a catastrophic decline, plummeting from over $100 to near $1 after failing to stay above the 20 WMA. Such examples highlight the importance of using exit strategies to mitigate losses in volatile market conditions. If traders had followed this simple exit strategy, they could have avoided catastrophic losses. Remember, even the mightiest houses can fall, and without a plan to exit losing trades, you risk losing everything. So, arm yourself with exit strategies, and you'll be better prepared to survive and thrive in the volatile stock market. As you step into the trading arena, it's crucial to maintain realistic expectations and prepare for potential losses. Having a robust strategy in place to handle setbacks will fortify your resilience amidst market uncertainties. To avoid the pitfalls of survivorship bias, rely on multiple indicators and take into account both successes and failures in your trading analysis. Engaging with a community of fellow traders can also provide invaluable insights and support to enhance your trading prowess. If you found these insights valuable, show your support by liking the video and joining our dynamic trading community. Curious about how other traders approach these challenges? We would love to hear your thoughts and experiences in the comments below. Thank you so much for watching. Join our community today to gain access to additional strategies, screening tools, and a supportive network of traders. Together, let's navigate the complexities of the market and strive for trading success. Join us now and elevate your trading journey.